This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Wednesday, January 18th, 2017, and this week we're going to take a look at the best growth stock to buy right now. On to our opening slide. It's called the Setup and the Approach. And just as a reminder, the key objective of this podcast is to find a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across 6,000 stocks that we cover every week. So yes, we're quite pleased with what we've developed. So the view you're getting is not driven by some sensational headline in some popular publication focused on increasing readership, but simply on the best investment opportunity we could find for you. An easy way of thinking about approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Here's the backdrop. Now, truly viewed, creating such a model is daunting, but I believed I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance and development guy to judge the research that we reviewed. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. And furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Here's a point worth remembering. These views are based on today, an unforeseen economic report, a regional conflict, revised policy can change these expectations tomorrow. And a benefit of using a professional money manager like Conner Management Group, that's my soft plug, is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. Okay, and now, so what do we find for you this week? The best growth stock to buy right now we found to be in the telecom equipment industry. On to our industry overview. The telecom equipment industry consists of manufacturers of hardware and software systems for communication networks worldwide. Now, just to level set, here are the 10 largest competitors by sales. I'm sure some of these names are quite familiar. Cisco Systems, Ericsson, Qualcomm Incorporated, Nokia, Aris International are the top 5. And the next 5 are Motorola Solutions, Juniper Networks, CommScope Holdings, Ciena Corporation, and Marvell Technology. Now, what are the growth drivers? Largely, the growth drivers are increasing bandwidth driven by services like Netflix and YouTube. It's just a lot of data moving around, and it needs to be managed. So what are the industry challenges? The challenges facing a lot of these companies are basically meeting this increasing bandwidth demand with software solutions or hardware solutions. And hardware solutions using things like physical routers and switches has been the traditional approach, but there is a movement towards using software solutions things called software-defined networks. And now for the big reveal. For the best growth stock to buy right now. We found it to be a company called Verifone Systems Incorporated. Their ticker symbol is PAY, and we see the 6-month upside potential at positive 35%. On to the quick facts slide. Verifone Systems Incorporated engages in the design and marketing of point-of-sale electronic payment devices, security and encryption software, and certified payment software for electronic payment transactions and value-added services. These solutions process various payment types, including signature and pen-based debit cards, credit cards, and contactless / radio frequency identification. They provide solutions and services for financial, retail, hospitality, petroleum, and transportation markets. Okay, that's a little bit of a mouthful, not too much, but I have no doubt that you interact with Verifone Systems products. Their most popular product, which you're likely familiar with, are these chip-enabled devices that you encounter now at a lot of retail stores. I'm sure that they provide a lot of the payment devices when you would just slide your credit card, but now they are a big provider of the chip-enabled devices where you kind of now slide your card in on the short side, and these new credit cards have the chips on them. So that's a Verifone Systems product. Okay, so their website is www.verifone.com. That's verifone.com. They're headquartered in San Jose, California. They were founded in 1981, and they have 5,400 employees. Okay, on to the metrics slide. The annual revenue for Verifone Systems over the last 12 months was $2.0 billion. Their net income was $185 million, and their cash from operations was $360 million. The operating margins for 2016 are tracking to be 16.5%, and for 2017, the margins are expected to increase slightly to 17.0%. Now, on to the valuation metrics. The trailing PE ratio right now stands at 11.0, and the forward PE ratio stands at 10.5. And that relationship means that analysts expect the company's earnings to increase. And of particular note, we would like to state that these PE ratios are considerably below historical averages, which is one of the main reasons why we think that this is such an attractive opportunity. The PEG ratio stands at 2.3. The price-to-sales ratio stands at 1.0, and the price-to-book ratio is at 2.5, and the enterprise value to EBITDA ratio stands at 11.0. The dividend yield for Verifone Systems is 0. They do not pay a dividend. On to the price chart for Verifone Systems. The basic observations from the price chart is that the company stock is down 18% from a year ago. The pullback is related primarily to delays beyond its control. There have been Visa and MasterCard certification delays related to the implementation of these new chip-based payment terminals. So these unexpected delays have negatively impacted the stock. On to the looking back and looking forward slide. So, looking back, during 2016, MasterCard and Visa failed to dedicate resources to certify the operation of Verifone payment terminals, which have led to delays and created a bottleneck on expected implementation of their planned chip-enabled payment terminals. Consequently, over the past year, the stock experienced a pullback from around $22 down to around $18. Now, looking forward, the certification process has been streamlined and is expected to accelerate the adoption of these Verifone payment terminals. Revenue growth is expected to be slightly negative for 2017, but that's due to political and macroeconomic factors in Turkey and Latin America, while demand from China is actually expected to be unchanged. Although revenue growth is expected to be absent in 2017, the pullback in stock price has created an attractive buying opportunity. The 18% pullback in 2016, while Verifone made positive strides in 2016, has created an undervalued investment opportunity that we find quite attractive. So Verifone also has solid financials and is expected to resume its growth beyond 2017. On to the next slide. It's called the Why Now, the bull rationale. So the reasons for our bullish outlook are pretty short and straightforward. Basically, the company is expected to have decreasing earnings per share going forward, and they have low valuation metrics right now, and they're expected to have even lower valuation metrics in the near future. So, improving operating margins and low valuation metrics are the drivers. On to the summary slide. The financial statement quality of Verifone is good. The operating margin trend is slightly improving. The price pattern trend, as we discussed, is declining. And our industry outlook is flat. The overall market outlook, we're calling it flat, although GDP is expected to grow around the 2.5% range for the year. The recent closing price for Verifone was $18.57, and our 6-month price target outlook is $25.07, and this gives the company a 6-month upside potential of positive 35%. So it's for all these reasons that we believe that Verifone Systems is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hello everyone, this broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we develop some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you would like to receive more timely investment information and be able to post questions, just send me a message to ask to join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Conner. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone. Have a great week.